Welcome to the Deep Dive.
Yeah.
We're the show that takes complex stuff and, well, tries to make it crystal clear.
That's the goal.
And today, we're really diving into something that, honestly, affects almost everyone who deals with money globally. That incredibly clunky, slow, often expensive way we send money across borders.
Yeah, it's kind of amazing it's still like that, isn't it?
Really is.
Yeah.
Feels like something from, I don't know, 50 years ago.
Yeah.
Not the 21st century. Sending money should be easier.
Absolutely. You know, the traditional ways, they involve this whole complex web of banks, intermediary banks,
Right.
and these pre-funded accounts, nostro accounts that just tie up huge amounts of money,
Yeah.
plus delays, hidden fees. It's just ripe for disruption.
Which brings us to today's topic.
Exactly. There's this digital asset out there specifically built, engineered really, to tackle this head on.
And that's our mission for this deep dive. We're going to unpack this asset, XRP.
Yeah.
We'll look at what it is, the tech behind it, and why it's become such a big deal in international payments. Our aim isn't to bury you in jargon or settle all the online arguments.
No, definitely not.
We just want to pull out the key stuff, the insights you actually need.
Yeah.
So you get a really clear picture of XRP, what makes it tick, and the important debates around it.
Basically give you the solid context.
Exactly. So you feel properly informed. Okay, let's jump in.
Right. So XRP. At its core, it's a digital asset, a cryptocurrency. It runs on its own specific blockchain called the XRP Ledger, or XRPL.
Yeah.
And unlike, say, Bitcoin, which kind of emerged as maybe digital gold or Ethereum as a platform, XRP had a really specific purpose right from the start.
Which was?
Fast, cheap, and energy-efficient global payments and transactions. It's less digital gold, maybe more like, I don't know, digital FedEx for value.
Huh, I like that. Digital jet fuel, you said before. That focus is important. And this idea of it being a bridge currency, that sounds crucial. Can you explain that simply?
Sure. Think about a bank needing to send money from Japan, yen, to Mexico, pesos.
Okay.
Traditionally, they'd need accounts in pesos, maybe via another bank. They have to pre-fund these accounts, nostro account.
Right, holding actual pesos just in case.
Exactly. Billions globally just sitting there. Idle capital. XRP aims to replace that need.
Oh.
Instead of holding pesos, the bank converts yen to XRP, sends the XRP, which is super fast, and then it's instantly converted to pesos on the other side.
So XRP is the short-term bridge between the yen and the peso.
Precisely. It removes the need for those pre-funded nostro accounts. It's about freeing up that locked capital, making the system more efficient.
That's huge, not just speed, but freeing up potentially billions in liquidity. That's a quiet revolution, potentially.
It could be.
And Ripple, the company, often comes up here. What's the connection?
Right. Ripple played a big role in developing the XRP Ledger initially, and they build products like their on-demand liquidity service that use XRP.
Okay.
But, and this is important, the XRP Ledger itself is open source, decentralized. Ripple doesn't control it.
And it doesn't use mining, you mentioned. It uses something else.
Correct. It uses a proof of consensus mechanism, different from Bitcoin's proof of work, no energy guzzling mining.
Okay, let's dig into that how it works bit then. The speed and cost are always highlighted. What are the actual numbers?
Yeah, they're pretty impressive according to the sources. The XRPL is apparently capable of handling up to 1,500 transactions per second.
1,500 per second? That's a lot.
Uh-huh.
How does that compare?
It's significantly faster than many traditional payment systems and even faster than, say, Bitcoin or early Ethereum transaction rates. And the settlement, the final confirmation.
Yeah.
Typically under 5 seconds. Like 4 or 5 seconds for money to be confirmed, sent globally.
Wow. Compared to days for some bank transfer.
Exactly. It's a completely different scale of speed.
And the cost. Those wire fees can be painful.
Almost non-existent on the XRPL. We're talking fractions of a cent per transaction.
Fractions of a cent? How does that even work?
Well, the tiny fee isn't really about profit. It's designed mostly as an anti-spam measure.
To stop people flooding the network.
Precisely. If it were totally free, someone could just bombard it with useless transactions. The tiny fee makes that prohibitively expensive at scale, keeping the network clear for real payments.
That's clever. Okay, so no mining. You mentioned proof of consensus. Can you break that down a bit? Why is that different and important?
Sure. So Bitcoin uses proof of work. Miners use massive computing power, huge amounts of electricity, to solve puzzles and validate transactions.
Right, the big environmental concern.
Yeah. The XRP Ledger uses consensus. A network of independent validators' computers running the software rapidly compare transaction lists.
Okay.
They need to reach an agreement, a consensus on which transactions are valid and in what order. Once enough agree, the transaction set is confirmed and added to the ledger.
So no puzzle-solving competition.
No. It's about agreement, not computational brute force. That's why it's so much faster and uses vastly less energy, a fundamentally different approach.
And you said this ledger, the XRPL, is decentralized and open source, so not controlled by Ripple or any one group.
That's the design. It's open source code. Anyone can run a validator. The network is maintained by this distributed group of participants worldwide. That's key for its security and resilience. No single point of failure.
Got it. And the XRP tokens themselves, they weren't mined. How did they come into existence?
Another key difference. The total supply of XRP, 100 billion tokens, was created right at the beginning, pre-issued.
All at once.
Yes. Then portions were allocated, including a significant amount to the founders and to Ripple to help develop the ecosystem and fund operations over time, often placed in escrow with programmed releases.
So unlike Bitcoin, where new coins are mined gradually over many years.
Exactly. Bitcoin's supply enters circulation slowly through mining rewards. XRP's total supply already exists, though much is locked up and released gradually, according to the ledger's rules.
Okay, that's a really clear picture of the tech. Fast, cheap, energy efficient, consensus-based, pre-mined. So the big question, how is this being used today? What are the real-world applications?
Well, the most obvious one, given its design, is cross-border payments and remittances.
Right, sending money home.
Yeah. Imagine someone working abroad sending money back to their family. Traditional services can be slow, take a big percentage in fees. XRP offers a way to do that much faster and much cheaper, using it as that bridge currency we talked about.
Makes sense. And then for businesses, you mentioned on-demand liquidity, or ODL.
Yeah.
That uses the bridge idea too?
Exactly. ODL is Ripple's product that leverages XRP. Instead of a payment company needing that pre-funded account in, say, Mexican pesos.
Yeah, the idle capital problem.
Right. They can use ODL. They send the source currency. It's converted to XRP, bridged across instantly, and converted to pesos for payout, all in seconds.
So the company only needs liquidity for those few seconds, not days or weeks.
Precisely. It makes their balance sheet way more efficient, frees up capital they can use for other things. It's a big deal for financial institutions managing lots of cross-currency flows.
I can see that. It seems like it could really change the plumbing of international finance. Are there other uses beyond these big payments?
Definitely. Because the transactions are so cheap, it's really well suited for micropayment.
Like paying tiny amounts for things.
Yeah, imagine paying, a fraction of a cent to read one online article or per minute of streaming video, things that aren't economical with credit card fees.
Opens up new business models.
Potentially, yeah. And the XRPL itself isn't just for XRP. It can support other issued tokens like stablecoins or other digital assets. And it has a built-in decentralized exchange, a DEX.
So you can trade assets directly on the ledger.
Basic trading, yes. Directly between users without needing a central exchange as an intermediary. It points towards more direct P2P finance.
And this isn't just theory, right? You mentioned institutions are actually using this.
Yeah, our sources point to some significant names. Santander, the big bank, has used Ripple's technology powered by XRP for payments. SBI Holdings in Japan is a major partner.
Okay.
There have been reports and discussions involving others, like Bank of America exploring its potential. So yes, there's definitely serious interest and adoption from established financial players.
That's important validation. Okay, so let's put XRP side by side with the big two, Bitcoin and Ethereum. How does it really differ? We touched on consensus versus mining.
Right, that's a core difference. Bitcoin and, historically, Ethereum rely on proof-of-work mining, energy-intensive, slower finality. XRP Ledger's consensus is designed for speed and low energy use. Huge difference in efficiency and environmental impact.
And the supply model, too. We covered that. Pre-mined XRP versus gradually mined Bitcoin.
Correct. Finite supply created at Genesis for XRP versus Bitcoin's capped but still being mined supply. Different economic models.
And maybe the most fundamental difference is the purpose. You said Bitcoin is like digital gold. Ethereum is for smart contracts.
Exactly. XRP was purpose-built for one main thing, payments and liquidity. Fast, cheap value transfer.
So it's more focused.
Very focused. While the XRPL has some other features like token issuance and the DEX, it's fundamentally leaner and optimized for that core payment use case. Bitcoin is primarily about secure value storage. Ethereum is this massive, flexible world computer for decentralized apps, smart contracts, DeFi, NFTs.
A whole different beast.
Totally. XRP's niche is really that global payment and liquidity engine. That focus is its strength, but also defines its scope compared to the others.
Okay, that makes the positioning really clear. Now, let's get into the pros and cons, weigh things up. The advantages seem pretty clear from our discussion.
Yeah, the big ones are definitely speed near instant settlement, cost fractions of a cent, scalability handling many transactions per second, and that purpose-built design for payments.
Those are strong technical points, especially compared to legacy systems.
Undeniably. Moving value globally in seconds for virtually nothing. That's a powerful proposition.
Okay, but now the flip side. The criticisms and risks. One that always comes up is centralization.
Right, this is a major point of debate, and it's nuanced. Critics often point to Ripple, the company, initially holding a very large portion of the total XRP supply.
Even though the ledger itself is run by distributed validators.
Correct. The argument is that even with a decentralized network, having one entity hold so much of the asset could give it undue influence or control over the ecosystem's direction or the market.
So concerns about potential influence, even if not direct network control.
Exactly. It raises questions for some about how truly decentralized the entire ecosystem is beyond just the transaction validation.
Got it. And then the really big one, the SEC lawsuit. You can't talk about XRP without mentioning it.
Absolutely unavoidable. The U.S. Securities and Exchange Commission sued Ripple, alleging that its sales of XRP constituted unregistered securities offerings.
And this case has been huge for the whole crypto space, hasn't it?
Massively important. It's become a key battleground for defining how digital assets are regulated in the U.S. Is something like XRP a currency, a commodity, or a security? The outcome has and will continue to have major implications.
And just to be clear, we're just reporting what the sources say about this. We're not taking sides or making legal claims here.
Absolutely not. It's just crucial context. The legal battle has significantly impacted XRP's adoption, its market, and the broader regulatory conversation in the States.
Okay. And besides those specific issues, there's just general market risk, right? Like any crypto.
Of course. XRP's price is volatile. Like all digital assets, it can swing based on market news, regulatory changes, overall economic conditions, adoption trends. That's just inherent risk in this asset class.
And lastly, competition. It's not the only game in town for better payments.
Definitely not. Other crypto projects are targeting cross-border payments too. And you've got traditional players like Swift trying to modernize their own rails, plus new fintech solutions. It's a very competitive landscape.
So XRP has its advantages, but it's fighting for its place.
Yes, it has a strong technical case for its niche, but adoption and overcoming these other hurdles are key.
Okay, great. So let's try and wrap this up for you, bring it all together. We started with that common headache, sending money internationally.
Right, and we saw XRP as this digital asset really engineered from the ground up to fix that, to be super efficient for global payments.
Using its unique consensus method, no mining, making it fast, cheap, and much greener than some alternatives.
Yeah, distinguishing it clearly from Bitcoin's digital gold role or Ethereum's world computer platform, XRP is about moving value.
And despite facing those big challenges of the SEC case, the centralization debates it has seen real use, especially with that on-demand liquidity concept catching on with some financial institutions.
It really is a fascinating example of a purpose-built digital asset trying to carve out a specific high-impact role in finance.
So as you think about all this XRP's design for speed and cost, the institutional interest, the challenge is, here's something to maybe chew on. What do you think is the single biggest hurdle, whether it's regulation, adoption, technology limitations, or something else that XRP, or really any digital asset aiming at cross-border payments, needs to clear to truly change how we all move money around the globe?
That's a great question to ponder. The interplay between the tech, the rules, and getting people and businesses to actually use it.
We hope this deep dive has given you that clear, concise picture of XRP and its place in the evolving world of money.
Hope it was helpful.
Until next time, keep digging deeper.